Hello there, everybody. Welcome back to our program here on XM Live. Hope everybody has been having a fantastic day so far with great and amazing trades as per usual. Happy Monday, so happy start of a brand new week. If you don't already know who I am, my name is Anna. I'm one of the XM Live Education hosts. And I'd like to welcome you to my Trader Lingo show today. We're going to be talking the Trader Talk. This is a special show that I present every Monday, Tuesday, and Wednesday in the XM Live room of our XM Live Education program at this time, 2:20 p.m. GMT, right here in the XM Live room. So join me, guys. And for those of you watching from YouTube, you can head on to xm.com. And from the research and education section, you can join the live education program and join the session, the Trader Lingo Show. So what I've done, guys, is I have accumulated a list of trading terms. I have collected them to help you speak our trader's language. Now, I know that many of our viewers who come from all over the world actually are beginner viewers, meaning that you guys are just starting your trading journey. You're trying to figure out how everything works, and you're trying to learn how to make some profitable trades by listening, of course, to traders who might have a little bit more experience talk about trading. You're reading about trading, and you've probably noticed that in the trading world, there's a very interesting terminology. Now, if you've sat down at a table with your fellow traders who might seem to have a little bit more experience in trading than you guys, I'm sure that you've heard them throw around terms that sound really interesting, but of which you're not 100% sure what they mean in terms of trading. And this is where the show comes to play to help you guys understand these unofficial trader lingo terms, I call them. You can call them slang terms, but in general, it's the trader talk, the trading chat, right? Words that traders have come up on their own to refer to different market events, different trend lines, different chart patterns, and much, much more that has to do with the markets and trading. So let's get started, guys. Now, again, I've left a note over here to join me every Monday, Tuesday, and Wednesday at 2:20 p.m. GMT in the XM Live room. Okay, guys? So for the next 20 minutes or so, I'm going to be right here. Feel free to use the XM Live room, actually, the XM Live chat. We do have a live chat in all the three rooms that you will find in the live education program. Guys, the XM Live room, beginner room, and advanced room. So all you have to do, guys, is simply click on the text box on the right hand side of the room that you're in, write down your name or nickname, click on join, and shoot away your questions. Also, for the people watching us from YouTube, go ahead and ask your questions as well. I'm going to be right here to answer everybody. Don't be shy, guys. I promise I'm friendly. I'm going to be engaging and interacting with you. Okay, guys, so let us begin. Today's going to be a very interesting session, guys, because we're going to be talking about animal symbolization. And who knew that animals are so important in the trading world? Guess what? They are, if you didn't already know. Now, bears versus bulls. Very, very interesting over here. Now, animals are actually indeed very important symbols in the trading world. Okay. They are used to describe trends in the markets. Now, the bull and the bear, to be more specific, are the iconic Wall Street animal symbols known all over the world. In fact, there are many, many animal words that traders like to use when they refer to different events within the markets and in the trading world in general. However, I will be sharing with you today the top animal terms used, most commonly used amongst traders all over the world. Okay, bears versus bulls are the top Wall Street animal symbols that everybody knows about. Okay, and if you don't already know, no worries, guys. We're going to talk about it today. Now, first trader lingo term we're going to be discussing today, guys, is bullish. And you will be hearing traders use this word a lot, guys, okay? It's not official. It's not an official finance term out there, guys. It's unofficial, but there's a reason why traders have, you know, refer to this specific, trader lingo term the way they do. Now, straight off the bat, as you see, this trader lingo term is made up of the animal that we just saw versus the bear in that previous slide. It's bull, right? So bull for bullish. What does bullish mean though in trading? Now, bullish refers to a strong market where the overall trend or direction of a price is expected to move higher. If a trader is bullish, they expect the value of an asset to rise. Okay. So let's say we're looking at our trading chart, just like the example that I have here in the image, guys. And let's say that we're looking that there's an upward trend in the price. Okay, so the market is moving upwards. Whenever you see a trend or the line in general moving upwards, just know that most commonly traders will refer to this trend as a bullish trend, meaning that everything is looking great. The market is moving higher, it's stronger. Now, bulls attack by lowering their head and then they strike by raising their horns. For this upward move, the bull has been chosen as the animal to describe an asset's upward trend or direction. Now, bull markets, which general, as we said, they describe strong markets, usually occur when there's an economic boost, when employment is really high, everything is looking really great. Trader psychology is high as well. So when everything is looking great within the economy, therefore the market is a little bit stronger. Therefore, we have a bull market. Okay. So this is what bullish means. Now let's go ahead and move on to the next slide where we will be looking at the opposite trader lingo term from bullish, which is bearish. And we see bear, which is the animal that we saw versus the bull in that first slide. Okay, now what does bearish mean? It refers to a weak market where the overall trend or direction of a price is moving lower. Now, if a trader is bearish, they expect the value of an asset to go down. Again, guys, we're looking at our trading chart and we see a line moving downwards. Okay, so when we see a downward trend in price, when everything is moving to the downside, this is commonly referred to by traders from all over the world as bearish. Okay. Now, bears attack by standing on 2 feet and strike down with a front foot. For this downward move, the bear has been chosen as the animal to describe an asset's downward trend or direction. And this is the reason why this, the line moving downwards is known as bearish, okay? Because it depends on the way that the bear attacks. All right. Now, staying on the animal categorization, guys, we're going to be looking at another set of animal symbols within the trading world. Okay, guys, so we have hawks versus doves. Okay, before we spoke about bears versus bulls, which are, strong wild animals. Now we have hawks versus doves, which are birds, right? So these are also animal symbols commonly used to describe now changes in interest rates. So we're going to be looking a little bit into central banks. Okay, hawks and doves are terms used by analysts and traders to categorize members of central bank committees by their probable voting direction ahead of monetary policy meetings. Okay, guys, so before these leading central banks go ahead and have their meetings and announce what they will be doing with their interest rates, will they be raising their interest rates, lowering their interest rates? Okay, traders commonly refer to their voting direction as hawks versus doves. Okay, more specifically, hawks are those who want to see higher interest rates, while doves are those who would prefer interest rates to remain low. Let's explore this concept a little bit deeper. Now, hawkish, trader lingo term hawkish over here. And as you see, this trader lingo term is made up of the bird that we saw versus the dove, hawk. Okay. Now, a hawk, as we said, is somebody who favors higher interest rates, okay, meaning a tighter monetary policy with the aim of keeping inflation in check. This is often at the expense of economic growth as higher interest rates discourage borrowings and encourage savings. Okay. In general, hawkish refers to interest rates that are believed to go up. And we see a hawk, okay, the bird over here, sitting right on top of the Fed, which is the US Federal Reserve, America's central bank, one of the world's most powerful central banks. So, what it does, it controls the money supply of the US dollars. And using a few tricks under its sleeves, it raises or lowers interest rates. So, usually, it raises interest rates to keep inflation in check. This is why we have a hawk sitting right over here. Now, what higher interest rates do, they tend to have a negative impact on equities and equity indices within the affected economy, as investors sell equities in favor of bonds, which are considered lower risk investments that now offer strong returns due to increased rates. Now, this can in turn cause the economy's currency to rise. Now, let's talk about the opposite of hawkish. We're going to be looking into trader lingo term dovish, and as you see, This lingo term is made up of the animal that we saw versus the hawk. It is the dove. Okay, so dovish. All right, so dovish refers to interest rates that are believed to go down. Now, dove, as we mentioned, is somebody who favors a looser monetary policy, meaning lower interest rates with the aim of boosting economic growth. This should increase spending, benefiting the economy, and increase employment, but it comes with the risk of rising inflation. Lower interest rates tend to encourage investors to move their capital into higher risk assets and discourage savings. This can have a positive effect on the equities and equity indices within an economy. Lowering interest rates makes government bonds less attractive to foreign investors. This reduces demand for the country's currency and can cause the currency to fall. All right. So, this is what we mean when we say that it comes with a risk of rising inflation. Inflation is an official trading term, and it refers to the persistent increase in the cost of goods, the cost of living, the cost of services within an economy, as well as the devaluation of the currency. And this is exactly what we mean when we say the risk of rising inflation. All right, guys. So, lastly, what does it mean to sound hawkish? What does it mean to sound dovish? Being hawkish, and I put it in quotation marks, refers to the tone of language when describing an aggressive stance or viewpoint regarding a specific economic event or action. Being dovish, on the other hand, again in quotation marks, refers to the tone of language when describing a non aggressive stance or viewpoint regarding a specific economic event or action. In Forex, the terms hawkish and dovish refer to the attitude of central bank officials towards managing the balance between inflation and growth. So, this table right over here summarizes and gives you a good, clear overview of what we've been talking about. So, when we refer to a hawkish attitude, okay, it's directly linked to wanting higher interest rates, which then comes with the risk or concern of rising inflation. Whereas with dovish, okay, a dovish attitude is directly linked to wanting lower interest rates, which comes with the risk or concern of slower economic growth. There's always, that effort to balance inflation and economic growth. Okay, so this is the mission of central bank committees to get that balance, to have inflation in check and to have the economic growth in check as well. Okay, to keep price stability in general, as well as financial stability, to keep monetary policy in check, and much more. Now, why is it called hawkish? Why are higher interest rates known as hawkish, and why are lower interest rates known as dovish? It is because, obviously, guys, hawk is known as or considered as an aggressive bird by its nature, and then a dove is obviously the opposite. It's considered non-aggressive, and of course a symbol of peace. It's more cautious. Therefore, this is exactly why hawkish is used to describe an aggressive stance or viewpoint, and then this is the reason why dovish is used to describe the opposite, a more non-aggressive stance or viewpoint regarding a specific economic event or action. All right, guys. So this is the main idea between animal symbols. Okay. So there are many more animal um, names, or animal trader lingo terms that are based on animal words, actually, that traders do love to use, and there's a reason behind each one of them. As I spoke to you about the bulls, the bears, the hawks, and the doves, there's a reason behind why that specific animal is used to describe that specific you know um situation within the trading world. um After all, guys, a great example of how animal symbols are important within trading is the fact that, one of the most iconic and legendary figures within the trading world and Wall Street in general, um, who is the Wolf of Wall Street. Obviously, he is known as the Wolf, guys, because there's a reason why. We're using an animal term to describe that incredible legendary figure. Okay, so this is the main idea behind animal symbolization. Now, moving on from animal categorization to two other opposite trader lingo terms, which now have to do with price. Okay, so we have a lot of price lines within trading charts, guys, and the most important ones is bid price, ask price. You're going to hear traders talk about this a lot. Okay, so what is ask? Ask is basically or it basically means the price to buy, okay, for traders, all right? The buy price. It is what the trader is willing to pay for the asset. Now, when a trader wants to buy an asset, what they need to do is that they actually need to determine how much someone, okay, um, a buyer is willing to actually, sorry, somebody is willing to sell it for, the seller, right? They look at the ask price, which is the lowest price someone is willing to sell it for. And then the trader can understand how much he or she is willing to pay for that asset, right, guys? So, this is the main idea behind ask price.